Sure. Hello, everyone. My name is Jehan Ara. I'm the founder of the Nest.io, and we are delighted to be hosting this fireside chat with Dr. Reza Baqir, Governor of the State Bank of Pakistan. The response to this fireside chat has been absolutely phenomenal. I'm not sure whether it is Dr. Baqir's personality or the impact of the reforms that he and his team have been driving at the State Bank, or both. I'm not going to start with a big preamble. Just wanted to quickly introduce the governor and my two dynamic friends who will be in conversation with him today. So Dr. Reza Baqir, as most of you know, was appointed as the governor of the State Bank of Pakistan by the President of Pakistan on May 4th, 2019. Prior to this appointment, Dr. Baqir had 18 years of experience with the IMF and 2 years of experience with the World Bank. Dr. Baqir's academic research has been published in 2 journals of the economic profession, including the Journal of Political Economy and the Quarterly Journal of Economics. Dr. Baqir holds a PhD in economics from the University of California at Berkeley and an AB Magnus Cum Laude in economics from Harvard University. In conversation with him are Fawzia Naqvi. Fawzia started her career at Citibank in New York and went on to work in the microfinance field. She then spent a decade in impact investing with a large US foundation. Fawzia has been engaged with the Pakistan startup ecosystem for several years now and has been great in terms of giving us advice and making sure that we were taking all the right steps in moving forward as the ecosystem grew. Then we have Mubariz Siddiqui. Mubariz has been practicing law since 2008. I've known Mubariz since 2015 when he started practicing independently and has been working with startups since. He's been actively involved in working with startups, investors, and regulators to help make it easier to run a business. Mubariz is the only lawyer I know who has been an entrepreneur, an investor, and has worked extensively with regulators. So, over to you, Fawzia and Mubariz.
Thank you so much, Jehan, for hosting this event today. And we're really grateful to you and your team for organizing this. Dr. Baqir, welcome. We are so delighted that you could join us today. And I know you have a lot going on. And so we're really grateful for this time. And of course, a warm welcome to everyone joining us from around the world. Governor, I'm just going to take a moment to tee up our conversation, if you will permit me. Let us start with the startup sector. So over the last 2 years, as we've seen, the startup sector in Pakistan has really been heating up and gaining steam. And early stage investment activity has shown a lot of promise. According to the I2I Accelerator's data research, in quarter one 2021, Pakistani startups raised 19.3 million. With 13 deals closed. About 18.85 million came from international investors. E-commerce raised the most funding, followed by fintechs, and more deals have closed since. And over the last 2 years, you have been very hard at work, also trying to stabilize Pakistan's economic health, especially during the pandemic. At the same time, you've managed to usher in some very key reforms, which are creating a lot of buzz, positive buzz and excitement in the startup ecosystem. So let's start out with the first question, Governor. Given the intense global competition for investment capital, how do you think foreign investors, private equity, venture capital perceive Pakistan? And what would you want investors around the world to know about Pakistan's economic health?
Thank you, Fawzia. Bismillahirrahmanirrahim. It's a great pleasure to join you, Fawzia, Mubariz, Jehan Ara, and the others who are listening in today in this conversation. Just want to mention right at the beginning that the State Bank of Pakistan very much appreciates opportunities for this dialogue, as well as more dialogues in the future. And when we get into how we got and into announcing some of the reforms that we did for the startup, VC, and other community, you will know that those reforms came about as a result of a very good dialogue that we had with many of you. So just want to say right off the bat that the State Bank of Pakistan very much welcomes opportunities for such dialogue. Thank you to all of you for organizing it. Now, Fawzia, with regards to your question, how should foreign investors view Pakistan, I think I would want to point out, number one, that Pakistan, being the world's fifth largest country right now, is too big a market to ignore. Number two, it's a market full of young people. The demographic profile of Pakistan is one which favors the growth of new industries and especially startups which cater to a young population. Number three, cell phone penetration and in general, the penetration of tech-related things is reasonably high in Pakistan and offers a very opportune market to anybody considering investing in Pakistan. I believe what has held such investment back in the past has been the overall boom bust cycle that Pakistan has gone through repeatedly at a macro level. And generally, if you look at the coverage that Pakistan gets in international media, it's typically in the context of yet again the country having to go to the IMF. So I just want to dwell on that briefly and talk a little bit about why we at the State Bank think that some of the things that have been done recently are measures that are going to have a benefit for the country beyond just a short-term benefit. And I want to start this story by talking a little bit about what is it that brings boom-bust cycles to countries. And as Jehan Ara mentioned before this job, I was at the IMF for 18 years before I quit that career and joined the State Bank of Pakistan. And one thing that I learned very, very definitively in my time at the IMF was that when you look at the economic history and the economic health of emerging markets, one of the biggest determinants of whether a country is going to have foreign exchange problems and therefore a boom-bust cycle is the current account deficit. And for the non-economist type people in this conversation, a current account deficit, quite simply, you can think of as a deficit in the foreign exchange payments that a country has to make. You know, a country has foreign exchange inflows in the forms of exports, remittances. It has outflows primarily in the form of import payments and a few other categories. And the deficit that is left over is, in simple terms, you can think of as a current account deficit. In my career at the IMF, one of the best predictors of whether a country is going to have a balance of payment problem and a boom-bust cycle is if it has a large current account deficit. Now, this used to be the case in Pakistan. In the year 2008, 2018, Pakistan had a current account deficit of about $19 billion. This was the largest ever in our history. So think about it, that was an annual drain of $19 billion on the reserves of this country. And until this deficit is corrected, it'll be difficult to tell investors convincingly that, look, we think that the foreign exchange balance sheet of the country, of the sovereign, is in good shape. Now today, that deficit, which was a deficit of $19 billion, year to date in this fiscal year, so from July through March of this, is a surplus of nearly $900 million. So think about it. An annual drain that was $19 billion is now in green to the tune of $900 million. So that, first and foremost, is a signal that I believe is quite important to convey repeatedly to foreign investors that there is something very different in the Pakistan of a few years ago and the Pakistan of today. I think the second point that is key is that this improvement that has been brought about in our external outlook is not through some band-aid stopgap type measure. This improvement has come about because of several fundamental institutional reforms. And one that I will mention is a change in our exchange rate regime from one which used to be a fixed exchange rate, where often prominent personalities used to have a view about what is, in their view, the correct level of the exchange rate, and they would espouse that view, to a system that we transitioned at the end of June of 2019 to a market-based exchange rate system. Many modern emerging markets have a market-based exchange rate system. And the reason I mention this is that one key reason why we had such a large current account deficit, and in fact, one key reason why, again, we had to go to the IMF, was the decision in the past to maintain an unsustainable currency. If you have a market-based exchange rate, That question does not arise because the exchange rate adjusts in response to supply and demand forces. A market-based exchange rate doesn't mean that a central bank like ourselves completely gives up its responsibility of ensuring orderly conditions in the foreign exchange market. We do, but we do also allow the exchange rate to act as a shock absorber. And the case in point is a test that we had to go through about 9 months after we introduced a market-based exchange rate. And that was the test of COVID, the largest crisis that the world economy has seen since World War II. So if ever there was a test that could come our way of our newly born market-based exchange rate regime, that was the test of COVID. And I'm happy to say that Pakistan went through that test of its exchange rate system very well. The reason I say that is because if you compare the rupee to other currencies from the beginning of COVID to now, you will see that the rupee today is at about 154. Before COVID, it was also at 154. So it depreciated during COVID, and the highest it went up was around 168. That's about an 8-9% depreciation. And when you compare that to other emerging markets, and I'm talking about some big emerging markets, such as the Brazilian real, or the South African rand, or the Russian ruble, or you look at Nigeria, or you look at the Turkish lira, look at the range in which these currencies fell. That was in the order of 15 to 25%. And you compare that to the rupee that at its worst fell only at about 8% and then recovered all of those gains, all of those losses. The point that I wish to communicate is that our newly born market-based exchange rate regime got this very difficult test of COVID and has gone through it very well. And a combination of the fact that the current account deficit is eliminated, it has been eliminated through an institutional reform rather than a stopgap measure. And finally, the fact that our reserves, instead of being 7 billion approximately in June of 2019, today stand at around 16 billion gross reserves. And net reserves, which nets out borrowing, have increased by nearly $10 billion from June 2019 to today, are all factors, Fawzia, that go towards answering the question towards investors that, look, the foreign exchange environment of Pakistan has decidedly improved compared to a few years, and therefore gives you the right macro background to invest in Pakistan, and therefore has also given the confidence to the regulators like ourselves to ease a lot of the restrictions that existed before to bring money in and to take money out. And one thing that you will see in the months to come is that we will continue this journey of embarking upon further reforms to make it easy to invest, and also when there are foreign investors, to make it easy for them to divest. Some of the reforms that we did on the divestment side recently were precisely a reflection of this thinking, that we are gaining greater confidence in our foreign exchange balance sheet. And as we do so, we want to continue to make it easy for people to invest in Pakistan, and also to, when they want to disinvest, to make it easy for them to do so.
Fantastic. Thank you for that. Governor, given what's happening in India, which is really terrifying at a human level, let alone a macro level, I'm sure a lot of people in Pakistan today are thinking about, goodness, if something like this should occur in Pakistan, God forbid, what, if any, contingency plans are you thinking of? You've done a great job during the last year to stabilize Pakistan's economic health. What are you thinking about to mitigate against any potential risks that Pakistan may face now with what's happening in India?
Thank you for that question. I want to make 3 points here. First, this third wave is a serious threat. We all need to take it very seriously. And at the State Bank, we are ourselves looking at the developments very carefully and stand ready to take any and all measures that may be needed to support the economy through this third wave. Number two, Pakistan is entering the third wave with much better economic fundamentals than it entered the first wave. They're better if you look at the financial indicators. They're better if you look at the indicators on the real economy. Let me explain. On the financial indicators, our reserves today are much higher than they were when we entered COVID last time around. Our exchange rate system has already survived the test of COVID. Our stock market recently has been demonstrating a great deal of momentum. So on the financial side, these and other indicators are all much stronger than they were in the first wave of COVID. On the side of the real economy, we entered the first wave of COVID when we were in a phase of the IMF program that was geared towards stabilization, which meant having to be conservative on domestic demand so that our current account and our other imbalances improve. If you look at the large-scale manufacturing index growth then versus now, you will see a very marked difference. Today, we are entering COVID with all the real economy indicators in green. Well, what are the indicators? If you look at the sales of cars, if you look at the sale of cement, if you look at the power consumption, if you look at an index of FMCG, fast-moving consumer goods, you will see that all of these are growing year to year, about somewhere between 10 to 25%. And these are year-on-year rates before COVID, so they're not affected by the base effect. So my second point is that the domestic economy's real indicators of the real economy have much more momentum than last time around. And my third and final point, which I think is an important distinction between this wave of COVID and the previous wave, is that when the first wave of COVID came, there was a synchronized global lockdown and shutdown of activity. This time around, it's asynchronized. Some countries are having a third wave, which is very pronounced. But a lot of our export markets, like the US, which has made tremendous progress in vaccination, is open. And if you look at some of our other markets as well in Europe, the IMF has revised up the growth projections of all of these countries. So we don't have, from the external demand side, that fear that we had in the first wave of COVID. So in short, we are looking at the situation very carefully. We do believe right now that Pakistan's economy has a lot more going in its favor for this wave of COVID than the previous wave of COVID. And we are ready to take any and all measures, and we are more confident this time around because, as you mentioned, we were able to give a whole host of measures in the first wave of COVID, which the industry has appreciated. These included measures that had never been done in the history of the State Bank before, such as giving concessional financing to those companies that would commit to not lay off a worker, our payroll Rozgar financing scheme. And that saved between 1 and 2 million jobs. It was never done before. We did it, it worked, now we know how to do it. Similarly, aside from protecting employment, we supported health. We provided a concessional financing facility for anybody who wanted to set up a COVID treatment facility. And then we went beyond because there were drains on the healthcare industry in general. Anybody who wanted to set up a hospital could get cheap financing. Some hospitals have been able to get financing at 0% because of that facility that we gave to invest in the healthcare needs. So employment was number one, health was number two, and three, investment. On the investment side, we gave a facility called TERF, Temporary Economic Refinance Facility. Again, never been done in the history of Pakistan before. A targeted scheme where you only got 10-year money at a maximum end user rate of 5% to set up a new factory or expand an existing manufacturing unit. under this facility, about 450 billion rupees worth of investment has been made. That's about $3 billion. In our history, there has never been a period where in a span of about 6 to 8 months, that much investment has been mobilized. So our response in the first wave of COVID was aggressive in that the total of all of these measures is around 5% of GDP liquidity injection. It was flexible in that not only did we introduce measures, we were happy to revise them in light of the feedback that we got from the industry. And the period of March through June last year was very busy. If you look at the circulars that came out from the State Bank, it was a very busy period because we announced something, we got feedback from the industry, and wherever we found good things based upon that feedback, we did not hesitate to revise what we had announced. And finally, it was targeted because all of these schemes and the concessional financing, you could not get without demonstrating any performance. The first one that I mentioned on employment, you could only get that cheap working capital if you demonstrated that you had not laid off workers. The health one, you only got that money if you demonstrated that you were building a health facility or setting up a hospital. Turf, you only got against a letter of credit that demonstrated that you are purchasing machinery, either domestically or importing it. So the fact that we were able to successfully give an aggressive, a flexible, and a targeted response gives us confidence that this time around as well, if need be, we'll be there to support the economy.
Thank you. You cannot be over prepared. It's been demonstrated country by country for COVID, and suffering it in New York and watching what happened in New York. It's certainly a terrifying prospect. So very glad to hear that you're making contingency plans for this. Now moving on to some fun stuff, Governor. First of all, congratulations on reaching the 1 billion mark for the Roshan digital accounts. And I want to give you an opportunity to tell us all what the RDA is and what you're hoping to achieve with that. Over to you.
Thank you, Fawzia. We are really very excited about the Roshan digital account journey, an idea that started with the vision of our Prime Minister, Imran Khan, who asked the State Bank to think about ways in which we can make it easy for our diaspora to bank in Pakistan, to not only send money home for the needs of their families, but also to be able to invest in the economic future of our country. So the key insight or the thinking or the innovation that took place at the site of the State Bank was to create a framework for digitally onboarding our diaspora. And not only that, but then to include some regulatory provisions in this framework that address the common concerns that overseas Pakistanis normally have. So let me first talk on the digital experience. We had a very, very intense discussions with commercial banks about the customer journey when you want to digitally onboard an overseas Pakistani. Technology makes it possible. Through video capture, through scanning, through all the other means that are available to us, we can verify and we can do the customer due diligence. The banks can do the customer due diligence with the hookup with the NADRA database. So the first concept of that was going completely digital to onboard people. And the exciting offering of the Roshan digital account is that any overseas Pakistani can open an account in one of the participating banks of Pakistan, sitting anywhere in the world. And today, more than 120,000 such accounts have been opened from more than 100 countries in the world. The second point I want to mention was the regulatory support. These accounts have what regulators call, they are repatriable accounts, which means that when a overseas Pakistani wishes to disinvest and take its proceeds outside, there is no need for a permission from the State Bank. And it reflected our thinking very early on in the process that unless we make it easy for people to take money out, people are going to be hesitant to bring money in. And the fact that these are repatriable accounts is intended for that very purpose. And people have tested it. of the 1 billion that came in, a few million in the early stages of the Roshan journey did go out as well. People wanted to test the system. They took it out, and when they came back in, they came back in with much larger amounts. The third idea was that Roshan digital accounts is a lifestyle banking product. Once an overseas Pakistani opens a Roshan digital account, it is a permanent pipe that is created between our country and that overseas Pakistan. And it gives a very large set of opportunities to that overseas Pakistani. Let me start with some very, very simple examples. First is bill payment and e-commerce. Now addressing the overseas Pakistanis. If you are an overseas Pakistani and you have a Roshan digital account, one of your parents sends you by WhatsApp their electricity bill. You can pay it sitting in your room, wherever you are in the world, digitally through your Roshan digital account portal. If you want to order something on daraz.pk and have it delivered to your friends or family, you can do so sitting wherever you are through your Roshan digital account. So that is in terms of bill payment, payments, and so forth. Second, in terms of investment, you can invest in Air Pakistan certificates. They're offered between 5 and 7% in US dollars, depending upon the maturity, or in Pakistani rupees that offer as much as 11%. And you can invest in the stock market, again, digitally. And finally, an area that will be developed more is that you'll be able to invest in real estate. In each of these areas, our role was not only that to create a regulatory framework, but also a coordinating role with the other government agencies to give the user a trouble-free customer experience. One example of this is taxation. We worked with FBR in each of these investment areas to create a full and final taxation regime. A full and final taxation regime means that if you don't have any other reasons to file a tax return in Pakistan, for most overseas Pakistanis, that is the case because they don't have any income except the income that they're earning overseas. So if you're in that category, then the tax is full and final on each of these. So for instance, on the Air Pakistan certificate, the 10% withholding tax is full and final, which means it discharges your tax liability. And then you don't have any further obligation to file a return with FBR unless you have other income in Pakistan for which you need to file a return in any event. But having a Roshan digital account does not incrementally create any obligation on your part to do that. And that's a common concern that Pakistanis will often express to you, that look, we want to invest in our country, but please make it simple and easy for us. Similarly, the onboarding that we did with the Central Depository Corporation to invest in the stock market. We worked with them, with the stock exchange and other entities. All the time we had in our mind the overseas Pakistani from whom we wanted to give a good, seamless user experience. And our thinking was that if you build it, they will come. And we are happy with the response that has come. In about 6-7 months, we've had $1 billion. I'll let you do the math. Estimates are that overseas Pakistanis account for about 7 to 9 million. And if you think that includes members of households, the member of households may be half of that, or even say 1/4 of that. So even if you say there are 2 million overseas Pakistanis households, just as a conservative number, right now the number of accounts that I've opened is 120,000. So that means that the potential target market out there of overseas Pakistanis that have not yet opened a Roshan digital account is in the millions. And if $1 billion has come about from 120,000 accounts, and there are potentially hundreds of thousands more that are out there, you can do the math yourself. So we are very excited about this journey. And at the end of the day, it is about what I started off with, the Prime Minister's vision to make it easy for our diaspora, not only to bank in Pakistan, but also to invest in our country's future. And we are very excited about that journey.
So are we. Thank you. I'm going to turn over to Mubariz now.
Thank you very much, Fawzia. Thank you very much, Governor, for such extensive responses and giving us all that background. What I want to start with is by appreciating the role that SBP has played so far in allowing startups to incorporate holding companies abroad, in allowing startups to remit money to whitelisted vendors abroad, in making it easier for investors to repatriate funds. I know the EPD department, Mr. Arshad Bhatti and the team had worked really hard under your leadership, and they have actually delivered a policy that works. Finally, and which is also unprecedented in the history of Pakistan. So, I wanted to appreciate that front. Now, looking forward, given that State Bank has done its part with the policy, a common complaint remains that the banks have not done their part or not doing their part. The banks have failed the SMEs or your freelancers or small account holders. Actually, when RDA hit 500 million, there was a ceremony at the Prime Minister House. And I remember the Prime Minister's exact words, quote unquote, there's an elite capture on the banks. Now, what I want to understand is that these complaints are not unwarranted. There are big companies that want to open accounts in banks and have been struggling for weeks, if not months. Banks still do not offer the right products to startups and SMEs, or even corporate products where they do not have, even a corporate credit card doesn't exist yet. It's not due to any absence of regulatory framework. It's just an absence of initiative on parts of the banks. And consistently, there has been a poor user experience that everyone in Pakistan, SMEs and freelancers, encounter from the banks. Now, the question is, what is State Bank doing to regulate the banks in a manner and regulate their conduct in a manner to allow for a better user experience for Pakistanis?
Thank you. This is a question, Mubariz, very dear to my heart and my colleagues in the State Bank of Pakistan. At an overall level, you're absolutely right. If you look at credit to GDP, Pakistan has one of the lowest ratios. And there is an embarrassing chart in the IMF staff report published most recently that compares Pakistan to a few other countries. And you will see that our intermediation is low by any measure that you carry. Whether you look at aggregate credit, or you look at credit to SMEs, or you look at credit to disadvantaged populations, whether you look at agriculture, whether you look at it from a gender balance. So across a whole host of measures. Now, I want to talk about 2 or 3 things that will help us all to be forward-looking and work together to see how we can address this. First is, you would have known that we have given for consultation and comments a digital banking framework. I encourage anybody listening on this call to take advantage of that. We welcome digital banks that want to come into the country and toughen up the competition to wherever you think the existing players are not doing enough. You see an opportunity, we're going to embrace you with open arms. I believe competition and transparency are the best ways to serve the customer at the end of the day, and the least coercive ways to do so. So please look at our digital bank framework, and please also get prepared to deal with the digital banks. I want to make a plea to everybody that we should work together to make the digital banking framework a success. And you would know that we have given 2 categories of digital banks. One has a smaller capital requirement than the other. One is a full-fledged digital bank. The other is one that can cater to SMEs and small operations. And the other one, the smaller capital, is precisely for this reason, that we do want some people to come in. We do want some constructive shake-up of the industry. All right, number 1. Number 2, we are looking at the issue of open banking. Open banking, as you know, is a topic that has strong views on both sides of the debate. On the one hand is that data and information is ultimately the most valuable assets of existing financial institutions. On the other hand, new financial institutions, fintechs, others, if you want to come into this space, they want to pay a price for using that data, and we have the legal issues covered of people being able to give consent, then why not? I, as you may know, chair a meeting on digital financial services called a stakeholders group, and we periodically have these meetings. And in the most recent meeting, and this forum comprises members who have differing interests in this. So it includes banks, it also includes fintechs, it includes telecoms, it includes the Pakistan Telecom Authority, the FBR, and other relevant agencies as well. The whole idea of starting this was to provide a coordination mechanism. Since the State Bank is the regulator of payments, including digital payments, there was a need to provide a coordination mechanism. And working with all of these entities, we tried to move forward on a number of such things. Many of the things that have come about, the framework for onboarding merchants with for a QR code or for POS, some other regulatory changes have come about because of this stakeholders meeting forum. In the most recent meeting, I announced that we have started a process for consultation on open banking. Our Deputy Governor Seema Kamil and my other colleagues are very much involved in it. I myself am going to chair the first meeting of that group. And again, that's an exciting opportunity for people to come in and shake up that space. And third, Mubariz, I think with the reforms that we did for disinvestment, for getting web services from places like Amazon, the OPCO holdco structure, all the other measures, I think we demonstrated that we are very open to feedback. I think you were part of the stakeholders group, which met many times. And I think we demonstrated with our action that we welcome feedback. So I encourage you, I encourage everybody listening on this call to reach out to us, give us suggestions for how we can get the client, whether it's a retail client or a corporate client or a fintech, to be served better by our banks. And I assure you that we will be very, 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 very positive on that. I also do want to mention that our journey hasn't ended by giving these, by undertaking these reforms. We want to have a very, very active agenda of other things to do. And therefore, I asked Arshad, our Director of Exchange Policy Department recently, to send an email to all the stakeholders that we worked with. Tell us what are the things that we should be working on over the next several months, because I want a year worth of agenda. This point on that we spoke about on convertible debt and the framework for that is one of those ideas as well. But it's one of those early ideas, and we are hopeful that by end May, you should see something from us on that front. But I don't want the journey to end at convertible debt. I want to ask all of you to tell us, and I want to assure you that you will find in us somebody who listens with an open mind, and wherever the benefits of something exceed the risks that we need to worry about as a regulator, we will be forthcoming. And the reforms that we did recently are an example of that, Mubariz.
Thank you very much for that. And one example, I was very much part of the consultation process. And one example that I often give is that State Bank delivered in a pandemic year, in 18 months, massive regulatory reforms, which is what we expect startups to deliver and move really fast and do things. So that's commendable. Again, just a little bit more on the challenger front. Now, given that we do accept that the incumbent banks are not likely to make substantial changes because they're already making money the way they are operating, and it requires a more nimble organization, and that's why the digital banking license exists. But there are other aspects of banking which may not be covered by the digital banking license. For example, the function that banks perform as authorized dealers in processing applications. Now, I know examples personally of people who have wanted to get get their shares registered. But the banks have refused to process that administrative work because it's a cost center for them, etc. Now, there's no separate license for that. Are you and the state bank open to a sandbox where, say, limited licenses for activities which could be taken up by fintechs, regtechs to cater to very specific problems? Is that something that the SBP would be open to, like, say, something that the SECP has done?
Yeah, Mubariz, thank you for that question. The question of sandbox often comes up, and I want to try to address it head on. First, I just want to say that we are open and are working on creating a sandbox environment. And I would say in about 6 months or so, you should see some positive news on that front. The second, I want to say that it's not as though we have totally not been working in a sandbox environment as well, because a lot of the pilots that we have given to EMIs have been a type of a sandbox where instead of calling it a sandbox, we allowed them to operate on a pilot basis. I think the point that I think you are making and others have made is that that was only limited to EMIs. And that's a point well taken. And that's why we are working on the sandbox framework. And I would encourage you to be in close contact with us, including with Arshad Bhatti, Director of our Exchange Policy Department, and also Sohail Jawad, who's the Director of our Payment Systems Department. Bring ideas for having a fintech that will address this problem of the authorized dealer, the bank, not catering to the client. I'll give you a small anecdote. I myself am very sensitive to this concern. One of the problems that always comes about is that a client submits a case to the authorized dealer, and that the authorized dealer has to send it to the state bank. Now, those clients that have reached to me would always reach out to me and tell me that our case is stuck at the state bank. And then, I would have to forward this to my colleagues and figure out what's going on. And half of the times I discovered that the case had not reached the state bank. It was lying with the authorized dealer, right? At least half the time. So we rolled out this initiative of transparency, where if you go on our website today, you will find a button for case lookup. And using the case ID that your authorized dealer has given you, you can put that in, and just like FedEx tracking, it will tell you where your case is as a client. And you will know, first of all, you'll get visibility whether your case is with a state bank or with the authorized dealer. And half the times, if it is with the authorized dealer, then you'll be able to get on their case to tell them to submit the case. And the reason we did even that visibility initiative was because our goal is to facilitate the end customer. So I would be very excited about any proposals that can come up for a framework that addresses our concerns as a regulator, because we have to be careful on who all we can designate authorized dealer, but maybe we can come up with a framework that addresses our concerns and also facilitates people. And if clients can get better service through another type of an authorized dealer and there's money to be made, why not? I will repeat again, I think that the way forward in addressing many of these things is through better competition and through greater transparency. And I would be very excited if people can partner with us in that journey.
Thank you for that, Governor. I think that's music to many ears. And the initiative by State Bank for that system, which gives more transparency in the process, is also very welcome. It's just that sometimes the banks either do not take on a case or ask for extensive information, which even State Bank does not require them to. And they hide behind State Bank generally that, we'll get fined, etc. However, I think this would address, you sufficiently addressed this concern. The last question before I turn back to Fawzia is a question that everyone really is very keen for you to answer, is around State Bank's policy on crypto, currency and assets. Now, across the globe, crypto assets are either governed by the central bank or the SEC. In many jurisdictions now, they are jointly governing because the distinction between asset and currency is often quite fluid in this asset class. Pakistanis have lost out on a lot of potential wealth to be made and a lot of potential wealth to be lost over the few years because of current indecision on where Pakistan's policy stands on this front. So is State Bank willing to either partner with SECP and jointly govern this, or actually enumerate its own policy on how crypto assets will be governed?
So Mubariz, on crypto, we have been studying it. It's not as though we have not been studying it, but our view has been that it's on balance helpful for us to be a bit cautious in how we move forward. And it is primarily from the concern of protecting the investor or the deposit holder, in simple terms. I think this policy is not all that bad. Look at what's happening in Turkey right now and the scandal that they have with the exchanges. And it is only when such experiences or episodes come about or scandals come about when it can tarnish the image of a financial system. So we are studying crypto, but one area in particular that we are studying is the CBDCs, the central bank digital currencies. And as you know, this is an area which many central banks are studying. China is amongst the few, if not the only, which has proceeded with a pilot on this. And this is an area where it holds the promise of many benefits, including financial inclusion, including digitization, and including visibility to help us in our fight against any anti-money laundering as well. And at the same time, it does have some challenges. It requires a level of robustness technologically and also from a telecom perspective. Now, we believe that with the rollout of RAST, our instant payment system that the Honorable Prime Minister inaugurated a few months ago, that we are very excited about, we believe that successfully completing that journey does put us in a good position to study CBDCs. We need some other prerequisites as well. But even in China, before they rolled out their pilot, they had been studying this for years. And so we are studying this. It's a very active area, and one area where we also welcome input from any of the stakeholders that would like to share some thoughts with us. But my vision of digitization is twofold. The first is digitization to further our goal of inclusion. And as you know, there is a very large overlap between using technology and especially digitization and getting to serve the underserved areas of our population, whether if you look at the penetration of credit and deposits, whether you look at women, for instance, or whether you look at SMEs, or whether you look at the agriculture and the farmer sector. You know, people are paying very large markup or interest rates because they are being forced to rely on informal mechanisms of borrowing. So one is, for me, one exciting area is the inclusion part, but then the other area is digitization in itself and for itself. And even if we didn't have the inclusion agenda, digitization to me is very important because of the efficiencies that it generates in an economy and the productivity that it can help to unleash by making it easier for essentially savers and investors to get together and for value-added services to be created.
Thank you, Governor. That was very helpful. Fawzia, I believe you have a question, a follow-up on this front.
Yes, so I'm sort of thinking about whether you've answered my question, but I'll give you another opportunity, Governor. banks, I mean, I'm old enough to remember a couple of your predecessors, also talking about inclusion and women being out of the formal financial system. My question is, why have Pakistani banks been such laggards in this area? And here you are, pushing for the same thing, and the needle doesn't seem to be really moving. So what are you going to do differently from your predecessors to increase inclusion and also to bring more women into the formal financial system?
Right. Let me address that in two ways. I think first, I would put forward that it is, in our view, in some of the areas where we have been doing interventions, the needle is moving. Let me give you one example. That is one of the key priority areas, and again, as area that has been heavily underserved by our financial system, is housing and construction finance. Prime Minister is very keen to promote housing and construction finance, not only as a sector to support the development of the country, because construction has linkages to many other sectors of the economy, but also to make it possible for people to realize that dream of home ownership. If Fawzia, you're in the United States, you know that in the US, people take that for granted. In many other countries, home ownership is not that unique a concept. Here, it's very hard. Now, let me tell you that in July of 2020, the Prime Minister started a whole work stream of coordinated work in this area. And he himself chairs a meeting of the called the NCC, the National Coordination Committee, and he chairs this meeting every week, brings together all the stakeholders working on housing. State Bank has one component of it, which is the housing and construction finance. And look at the total numbers. Housing and construction finance used to be around 150 billion rupees up till June of 2020. Look at it where it stands right now. It's reached around 210 billion rupees. And there's been a very, very large increase in just a matter of 2 quarters. Never in our history has that amount of an increase occurred in a particular sector. So what I'm trying to tell you is that on the one hand, we have a baggage of history and a financial system that is not very well geared towards serving some systems, some parts of the sector that have not been served well. At the same time, we should have some confidence, because where targeted interventions are being made, as in this case, housing and construction finance, the numbers are in front of you, and there'll be a press release on our website today as well that will show you in the way of a chart how much that credit has increased. Second, you spoke about women as another underserved area. For that, we have launched the consultation of a strategy called Banking on Equality, with double play on banking. That is going to set out targets for banks to not only achieve diversity in the employment of women in the financial sector, but also to come up with financial products that are geared towards meeting the financial needs of women, so that they look at this not from a gender neutral lens, but a gender intentional lens. We are also going to be starting dissemination of disaggregated data from banks about the take-up of financial services by women. And when we were launching the consultation of this, we had an event with the president of World Women Banking, and she made a very good point about how banking for women is a good business proposition as well, because she said, and another head of a large bank in Indonesia that is pioneering this, is that for banks, when they come up with women-centric products, and I'm not talking of pink checkbooks, I'm talking about actual financial products that cater to the needs of small women entrepreneurs, whether it's hair and beauty salons, whether it's women who cook food in their houses and send it to offices and earn a little bit of money, or some other such services, or any other type of a service. If you manage to come up with a good product, women propagate that in their social circles a lot more effectively than men do. This is the research that she found. And therefore, she was making a business case to all the banks that this is an untapped market for you. So you will see that with the banking on equality strategy, we hope that the way in which housing and construction finance has increased, you will similarly see an increase there as well. There are two areas which are very high on our list of where we need to make further progress on inclusion aside from gender. One is SMEs, and the other is agriculture. And on both, you will see some things happening on SME very soon, because we are working with the government on a new way and a framework for lending to SMEs that's collateral free. One of the biggest problems of SME finance is that banks ask them for collateral. For many SMEs that are operating informally, maybe they don't want to show the collateral or they don't have it. And in many other parts of the world, SME lending based upon cash flow is something that has served, that has filled that void. And we are working on a concept to that effect, and soon it will be unveiled. And then agriculture. If I will tell you this, if COVID hadn't come and basically taken out a good year of all the things that we were doing, many of these things would already have been rolled out. But we are happy at least that not only did we give a good response to COVID, but we were able to achieve some milestones on digitization, such as Roshan digital accounts, such as RAST, such as housing and construction finance. And we are committed here to bring more such exciting things as well.
Terrific. Just a little warning, Governor, we may keep you here slightly longer because your answers are so thorough and so interesting, and we want to make sure we hit all the points that we've prepped for. So the next question I have for you is about state bank independence. There's been a lot of talk about that, and there's been some level of dissonance. So I want to give you the opportunity to tell us, why does it matter, this issue? Why is it important to Pakistan's economic health, and why should everyday Pakistanis care about the independence of the state bank? If you could just tell us what this is all about.
Thank you, Fawzia. And maybe after this, we could take one more question, because it's soon going to be iftar time in Pakistan. And I myself could, of course, stay, but I would hate to keep my colleagues waiting as well and come in the way of their iftar. So maybe we'll take one more question after this. On state bank independence, I'm glad you asked me this, because there was a lot of misinformation that unfortunately seemed to have gotten around. First was the misconception that the cabinet had already passed a ordinance for it, and the change had already occurred. And I want to clarify that all that the cabinet had approved was a bill that would be submitted to Parliament for debate on considering state bank independence. So it is something for which the process has just started. And just like any other piece of legislation, and especially on an important area like this, we also think it would be very important for Parliament to debate, to get perspectives from all relevant stakeholders, and to pass a bill that is in the interest of Pakistan and Pakistan alone. So that is in terms of the process. Second, I do want to tell your viewers that this is not the first time in the history of Pakistan that there is an amendment bill for the state bank. In recent years, it has happened at least 4 times. Most recently, just a few years ago in 2015, when in fact another step was taken towards independence, where a monetary policy committee was legally created in our law and was given the mandate, and the sole mandate in the entire country, to make interest rate decisions independently. So this is not the first time around that the State Bank Act is being put up for amendment, and not the first time around that certain provisions are being suggested to be included that would help with the independence. I think the way to think about what the cabinet has passed is threefold. First is that the bill should provide clarity on the goals, on the objectives of a central bank. And I think that is very important. Irrespective of what we may think the goals should be, to have a very clear language on any public sector institution as to what are the goals that it is held accountable to, I think is very important. Because that is how accountability starts. And currently in the law, the goals are not very well defined. In fact, they're only in the preamble and not in the actual law. And the language is a bit vague. And usually central banks have the following three goals. One is price stability, second is financial stability, and third is supporting growth and employment. And central banks have language that in one way or the other encompasses all of these three goals. So I think the first is to get clarity on that. And I think our goal on that would be to have some language that prioritizes sustainable growth. And international experience has demonstrated that sustainable growth is only achievable when price and financial stability are achieved. And therefore, in the current version of the bill, if you see that the language is such which states that price and financial stability are preconditions to growth, it is to bring about an emphasis on sustainable growth. So that's number one. Number two is, and this applies again to other public sector organizations as well, that once the goals of an organization have been clearly defined, that it to be given operational freedom to be able to use the levers and tools that it needs to achieve those goals. And it is in that context that there are several provisions with regards to strengthening the reserves and capital of the state bank, the way decision-making is done in the state bank, and a few auxiliary provisions. Related to this and the ability to move in this space is also the another point that has been discussed about whether the state bank is going to be given immunity. And I want to clarify that this point about legal indemnity is only in the context of the functions that are carried out by state bank officials as part of the functions in the act itself. If there is a criminal activity or theft or corruption, any state bank official can be investigated anytime. But the concept that is proposed to be introduced is similar to the provisions in the SECP law, in the CRC law, in the customs law, in the laws of a few other federal entities, that if there is to be an investigation by an investigative agency in Pakistan, that the reference for that be given by our board of directors or some other body that gets to vet whether a reference needs to be filed with the investigation agency. It could be our board of directors, it could be the cabinet, it could be the High Court, for instance, but some layer that helps to keep checks and balances which are good for any organization to function. So first was clarity on objectives. Second was the space to implement those objectives, the operational space to implement those objectives. And third is accountability. We ourselves would want that there be accountability, and the way it has been proposed is that the central bank would make itself accountable to Parliament. And instead of what is the practice right now, to publish a report on the state of economy, to actually come and explain how the central bank has achieved the objectives that are set out in the law. And the proposal is that that be done at least once a year with Parliament. And if the Parliament thinks that there needs to be some other ways in which the state bank should explain how those objectives have been met, that is very helpful discussion to be had as well. So I just wanted to put the whole discussion in context, and we expect over the coming months that Parliament will get the inputs of all relevant stakeholders, and the country will get an act that is in the best interest of the country itself.
Thank you. Mubariz?
So
and Mubariz, if I could
very of the
request,
time left.
this to be the last question, just again from the perspective of keeping an eye out on the clock and iftar.
Yeah, definitely. Last question, we'll keep it very brief, and it's very important. It's given that we want to do digital banking, digital fintechs, two layers, or one main layer is really missing. It's presenceless banking and paperless banking. By presenceless, we still need to be somewhere with biometrics. Is SBP looking to do something with Nadra to make eKYC easier? And paperless, is SBP going to mandate banks to actually take advantage of digital services available like the SECP? They still require physical certified true copies, despite there being a digital service available. Is SBP going to mandate these things and to make sure that we move towards more presenceless banking?
Thank you. On the first, we have already demonstrated through Roshan digital accounts that is possible. Presenceless banking is possible. Our overseas Pakistanis are not having to visit any consulate, any office to open a bank account. So we have demonstrated it's possible, and we are working on a framework for eKYC for residents as well. And in fact, we think it will help with our drive towards inclusion also. And also, Fawzia, on earlier your question about reducing the gender imbalance in financial inclusion, if you can make it easy for women to open an account without having to visit a bank branch, where some women might have the concern that they may be harassed or the environment is not one where they feel safe, this will address that issue. So we are looking at that, and you should be hearing from the State Bank on that. The other point you mentioned is on digitization. So I want to mention, and we've issued press releases to this effect as well. An example of our digitization drive is that we are only accepting now cases from authorized dealers digitally. We have a portal, and authorized dealers are being required to submit it only digital. And that is already in play. And the case ID and the lookup feature that I mentioned earlier also comes about because we have introduced that. But we are going a step further. And we have given a circular requiring banks to create digital portals themselves for their clients, so that their clients no longer have to shovel paper to the banks, so that it's an end-to-end digital experience. And we have communicated that by June, we expect banks to become fully digital, and for all of this processing to happen digitally. So it is an area that we are working on, and we have issued press releases on this as well. It's called the digitization of FX transactions with the State Bank, and that is the bulk of all the transactions that we do with authorized dealers, and it pertains to registration of shares or people wanting to take money out and so forth. So you will see that we are very committed to this journey to make also banks end-to-end digital. You must think that when you're doing something like this, you're shaking up the order. So right now, there are probably several people involved in the paper. One person is the person who's just going to make the photocopies. That person is receiving some kind of an income. Then there is a person whose main job is to sit on a motorbike and take the paper to some bank, and then probably sit there, have a cup of tea or something. So there is status quo bias, and when you do something, you have to constructively disrupt. So we are very committed on this digital journey, and we also know that our labor markets are very flexible. So any labor that is freed up in this side is going to be usefully employed in some other areas of the banks as well.
Thank you very much, Governor. Thank you, Fawzia and Mubariz. Governor, there are so many questions. I'm totally overwhelmed. Is there anywhere where I can compile these questions and send them to you so that you can ask your team to send relevant answers? Because there are an amazing number of questions and people are really waiting for answers. I'd really appreciate it.
Absolutely, Jehan Ara. I'll end on what I started off with, that the State Bank welcomes dialogue. And the dialogue that we've had with stakeholders that Mubariz also spoke about is a testament to that. I want to mention two key points of contact for anything related to the foreign exchange regulatory regime. please reach out to our director for the Exchange Policy Department, Mr. Arshad Bhatti. Mubariz, I would ask you also to channel feedback to him on FX regulatory related matters. For all matters related to digitization, payment systems, fintechs, and so forth, Sandbox, crypto, CBDCs, Sohail Jawad, who is the director of our payment systems department, is the right contact person, as both of them will also tell you, perhaps informally. I keep a very close dialogue with them as well, because these are matters that I'm very passionate about, and I keep being briefed on how we are doing in all of these areas. So I assure you, you have somebody at the State Bank in my office who is very keenly interested in all the areas that you are interested in. Work with us, and we will bring lots of excitement in the Pakistan investment scene.
How about a special desk for startups?
That's an excellent suggestion, Jehan Ara. Maybe you can also volunteer some people to come and help set it up. And for some people on your end to be available as well to help us, because in many areas, I believe we need to form partnerships. And you know, in some of these areas, we would very much welcome your support. Let me give you another, let me throw something your way. You know, one of the documents that gives people challenges is our foreign exchange manual. If you can get a few people together and create easy way to understand and digest our foreign exchange manual, that would be great. You know,
Sure.
and we will provide all the clarification on the answers. But if you can,
You
create,
volunteered.
if you can create such an interface, you know, it'll do a tremendous service. So there are areas where we want to tap your help as well, because you know how the investors think. We think like regulators, you know. So when we create even a simpler document, it might not hit the nail on the head. So if you have some way in which you can help us get greater dissemination of the foreign exchange manual, which is the key documents that holds the answers to all the questions that people ask, and you know, so we would be very, very supportive of something like that as well.
Thank you very much, Governor.
Dr. Baqir, I can't let you go without putting a thought into your mind to expand the use of the RDA and perhaps allow angel investing through the RDA accounts into startups. We really need early stage money. And if high net worth individuals are opening RDAs, if you could think about perhaps allowing angel investing, that would go a long way in you know, catalyzing the sector. So just to think about it.
Thank you. We will definitely think about it, and it's a suggestion that has come to us before, and look forward to a dialogue on that. But it's definitely something that you know, many people have suggested to us.
Thank you very much, Dr. Baqir, and happy opening of your Rosa.
Thank you very much.
Thank you very much for spending so much time. And thank you, Fawzia and Mubariz, for asking such brilliant questions. And we've got all the rest of the questions, which we will channel to the people that the governor has pointed out to us.
Thank you again for organizing it, and Khuda Hafiz.
Khuda Hafiz.